What are the 3 best features of the VA loan? One of them is really like 2 in 1. Then we'll talk about number 2, and the last one is the one that can save you money and really help you effectively pay your home off early if you so choose to. So first, let's look at the no private mortgage insurance on a VA loan if you happen to put less than 20% down. Now what I mean by this almost being a 2 in 1 is that on a VA loan, you can put less than 20% down. In fact, you can go all the way to 0% down. You often hear that pushed so many times about a VA loan. But here's the deal. Even if you put 0% down, there's no private mortgage insurance. That's a big benefit about the VA loan. Now, why is that? The full name for the VA loan is a VA home loan guarantee. And that word guarantee means effectively that there's an insurance policy on VA loans. What I mean by that is the VA doesn't give money out, but they guarantee loans that meet their certain VA standards, hence VA home loan guarantee. And how that works is, let's say we do your mortgage, and all of a sudden we're going to be the ones that fund it. But then the VA says, hey, Evan, if for some reason there's default or whatever, we'll guarantee up to 25% of any losses. There's more calculation to it, but that's a rough number for it. You expect to be around 25%. So there's a guarantee to it. What that means is you can do 0% down and there's still that guarantee backing you. So lenders can lend to you without private mortgage insurance, because private mortgage insurance is there as effectively default insurance. So for some reason you defaulted, that private mortgage kicks in and helps pay the lender any difference. Well, the VA loan already has that through the guarantee from the VA. So there's no private mortgage insurance. That can be huge, especially if you're putting less than 20% down. Number 2, more competitive interest rate. Now this one can be an iffy one. We just had the conversation last week again with another prospective client on, well, hey, if I go VA loan route, that all sounds good, Evan, but is my rate going to be higher? No, it should not be. Remember, we just talked about the VA is guaranteeing these loans. So not only does that mean that you can put less money down to have private mortgage insurance, but for lenders too, on what's called the secondary market, where loans are purchased and bought and investors buy the loan itself, that means they actually pay more for VA loans. So technically, if you had the interest rate on a conventional loan of say 7% and a VA loan that was 7%, if you're going to sell that loan to investors, they'll actually pay more for that VA loan that's at the same rate. Now, what a lot of lenders will do is they'll ultimately charge the same, and because the VA loan is different, it's not difficult, it's just different. It's only 1 in 10 loans roughly that are done. They'll make that extra money to help offset some of the operational costs of shifting around and doing the VA loan. Or they just realize, hey, we can make more money off of that, and people think, oh, it's the same rate because that's what rates are, it's the same as conventional. But in reality, you should see a more competitive interest rate. So in our world, effectively how we've built ourselves, the whole goal has been, let's streamline everything so we can handle VA loans the same way most folks handle conventional loans. And what that means is we'll make the same on a conventional as a VA loan, but what that converts to, because remember, people are paying more for those VA loans, that means we can actually offer a lower interest rate. So you should see a more competitive interest rate on a VA loan. I go in depth some more on that in other videos, but it can be a wide margin, anywhere from just 0.25% to 1.5 percentage points. The largest spread I saw was nearly 2 percentage points on the rate, which is pretty crazy. So rather than a 7%, you'd be looking at like a 5% or 5.5%. Pretty wild. I'd say most often you're in that 0.5% to full percentage point range, which is pretty crazy. So you should see a more competitive interest rate. And if you're not, you need to find someone that does do that. We'd love to work for you, of course. Now, number 3, the streamlined refinance. And this is where I was talking about, hey, not only is this just a cool feature, it's one that can truly impact you in the long run. And when I mentioned, hey, being able to pay your home off early, we really mean it. We have something we like to call our client 20-year vision. That's to have a paid for, near paid for home by the time of retirement. The only way to get there is if you can actually start paying off your mortgage faster than normal. The VA loan has a unique part to it, and that's called the interest rate reduction refinance loan, or what we like to call a streamlined refinance built within the VA. Now, that Earl interest rate reduction refinance loan is only part of a VA loan. And here's the deal. You can do that streamlined refinance with no appraisal, no income documentation, and typically we can get it done with just a soft credit check, so long as we can pull your rate down by at least 0.5%, and we're at least 210 days from your first payment, and we recoup those costs really quickly. VA requires within 36 months. It's usually well before that. Now we have some other really good videos on that you can go find. VA Earl, favorite Uncle Earl, VA Streamlined Refinance, a lot of different terms for it. But just know that feature of the VA loan is huge. Because again, The cost of doing that refinance is significantly reduced. No appraisal, which is pretty wild. No income documentation. You lost your job, you still have the ability to get the refinance. Now, there are still costs to doing it, but it's generally going to be a lot less than when you purchase the home because it's just a streamlined process. And we can help walk you through that one. We have a big tool that we call the Rate Radar that tracks specifically if you're eligible to do those or not, which can be really powerful. And that all couples together with that client 20-year vision. Because if you can, let's say, refinance your loan and drop off $200-$300 a month and apply that towards your principal to pay your home off, it can go off even quicker. And you're making the same payment you made from the beginning, but you're going to chop off years from your mortgage. So that rate radar that we have, if we're running you an example, we make sure that we line out how many years you could potentially knock off your mortgage if you did the refinance and put it back in towards the principal. Pretty cool feature. So those are the big three. Number one, no private mortgage insurance, and you can effectively go 0% down if you want and not get hit with that PMI, which is really cool. Number two, you should see a more competitive interest rate on a VA loan. And then number three, it has the ability to do that streamlined refinance, interest rate reduction refinance loan. In our rate radar, if you happen to be working with us, we will track that to a T. And if for some reason you didn't work with us in the past or whatnot, you're more than welcome to still sign up on the Rate Radar so we can track that for you. My name's Evan Kaufman. Hope this helped explain to you the three big benefits of utilizing a VA loan. Take care.